You have if not unique, very, very special view into the U.S. economy and what's going on because you have so many relations with individual consumers as well as small and medium-sized companies, as well as the very biggest of them. Where are we right now in the economy from what you see? Where are we with consumer spending? Where are we with commercial loans?
Sure. I'd say that on the commercial side, to take that first, the lending demand is down because the final demand is still shoring up. And so you had this panic borrowing. So if you came in through March and you had this panic borrowing where everything went way up and then it's come back down to that level. And it's basically back to, sort of back to where it was before the crisis and even a little bit lower. And that's a good news. That means companies, are ready to go as they start to see opportunities and the supply chain start to work and stuff like that. On the consumer side, it's been interesting. Where our basic belief, our research team, is that the United States will be down 4% for the year. And then next year will be up 5% or so. But the key is to think about it quarter by quarter. You had a deep drop in the economy last quarter. You're back up to where 95% of the economy is back, basically restored on a quarterly basis. And then we're going to work out from there. But behind that was a 1 to 2% growth economy. So the idea of it recovering that last 5 percentage points, tomorrow morning it's going to take a while to grind through that. Now the reality is every estimate, including you heard from Chair Powell yesterday, has gotten better rather than worse. And why is that? That's because consumer activity stays strong. So the fiscal stimulus, the monetary stimulus, the programs the Fed had, between the government administration, Congress, between what the Fed did, they basically, filled the hole, for lack of a better term, to bring the economy back up to level. And now we got to let it work out from there. And they probably need more stimulus for very defined places that are still in difficulty: restaurants, state and local governments, schools, performing events venues, some of the industries, airlines, and other things that you just can't have people do at the rate we had before. But the rest of the businesses, the dentist's office is back busier than they've ever been. So what do we see? Consumer spending is up year over year. That's up year over year. And that's good news. And so we're seeing it start to grow finally. It was growing at 10%, it fell, and it's worked us all the way back to even, and we'll see it probably start growing year over year. We're seeing it grow year over year so far in September. We'll see how we end up. So that's good news for the economy, meaning that amount of activity that goes on in our economy is restored.
Brian, you said it. Chair Powell said we're better off right now than we thought we would be at this point. But he also said there's a lot of uncertainty out there. And I'll name 3 of them. You mentioned one: fiscal stimulus, further fiscal stimulus. How badly do we need that? We have an election coming up. And by the way, there's the coronavirus. We don't really know about a vaccine.
And I think this is a healthcare crisis, and I said it back in March, and I said it even with you a few months ago in our interview. People can't forget that this is a healthcare crisis, and so what's happened over the last 6 months in the healthcare crisis, has gone on longer than that, is you're seeing the potential for a vaccine, but importantly, you're seeing better just behavior to keep the thing from spreading as fast. So as we're seeing it in the Northeast, for example, you've seen it crest over, and the infection rates are much, much different than they were early on. And you're seeing that the infection rates fall off. That's good news. And you're seeing the treatment regimens being different. And you're also seeing, because of the personal behavior, the people higher risk staying even more careful, the impact of the virus is still hugely hurtful to the people who get it, but not as bad outcomes. And so that's all good news as we wait for the vaccine, which is sometime out there over the next several months, and that would be good news. But until that's in everybody's arm, you're still going to have the drag of, will people go back to their behavior before? So that's the one thing. It's a healthcare crisis, and that's solved. What we need, I think, is pretty straightforward. You need more stimulus for the people. If you think about the analogy, we're all on one side of the river, and we all had to cross the river. We all needed a bridge. And so a lot of people are across the river. Certain segments of the economy, that are even doing better than they did before the crisis. Other segments are doing just fine. Take the medical industry is wholly back to normal now because the hospital capacity doesn't need to be held aside for the virus treatment. The housing industry is strong. The construction industry is strong. So those are across the river, so just let them go. Where you need help is restaurants and things like that. And so the next round of stimulus ought to be focused again on the areas that need the most help. And so PPP, the next round, should there be a second bite at the apple? I think so for the certain companies, because this went on longer than we thought it was going to go on. And so we need to help those companies. But I think they need to look at, small business, Unemployment benefits continue. The $300 is just going in the system now, frankly, because it took a delay to get it through. They continuing some supplement to help people maintain their standing because it's the right human thing to do. And then on top of that, then focus in on these other industries that are difficult, state and local government support, nonprofit performance venue support, things like that just need to be supported till we get to the point where the usage of them can come up and they can get back to normal and cross that same bridge. The rest of many people have crossed it. We got to help everybody else get across.
So part of what has supported the economy has been the Federal Reserve, and particularly saying they're going to keep the interest rates at 0 or just over 0 until 2023 now, we're told. That's got to affect Bank of America and its business, particularly its lending business, as it is really affected by the yield curve. So how is it affecting you in terms of net interest income? Can you make it up on volume or on fees or in other parts of the business?
You can. You just have to grind through the down and to get to the up. And right now, this quarter, we told people it'll probably be at the low point, and it seems to, because the interest rate environment accelerated, and the Fed pushed the interest rates down intentionally, and that's what they're supposed to do, and they've done a good job. So, look, people always say, how are you going to deal with this? I said, geez, I've been CEO since January 1st, 2010 to now, and we've only had a couple years where rates were above 0, so we know how to deal with it, Bank of America, and we'll go out and work on it.
Yeah, it's fascinating. The Federal Reserve now says they might actually extend the hiatus on dividends and buybacks for banks. How important is that to Bank of America?
Well, our basic thesis, a quarter doesn't make a difference, but our basic thesis, we're continuing to pay our dividends, and we pay a dividend. Our capital levels are growing. Our stress test results in the old one, we have to do the new one they just announced yesterday. So we'll go through all the work. But the idea of the industry, people have to step back and think about it. What didn't go on in this crisis, which is the worst economic crisis that's occurred in American history, at a pace that may never be replicated, we hope. The banks had capital, liquidity, and through the work the Fed did about stabilizing the markets in terms of the different facilities, many of which weren't used, but it was good that they were there to stabilize the markets. We've done what we were supposed to do. We supplied, capital. We supplied lending capacity to help people who were panicked go out and borrow and pay off the commercial paper and get their company in shape, and they've paid us back now. That was strong things. So, what the Fed will decide about the fourth quarter, we have a dividend and we're fine to pay it. But what they'll decide about the fourth quarter, I think people have to keep in a broader context. It'll be decided. But the broader context of Bank of America is we have excess capital. We're earning more than we pay out in dividends. Our capital levels continue to grow. We're taking on all the kind demands that have come at us, and we're going to return that capital as soon as we're free and clear to do so.